Professor, recently there has been a lot of hype about IPOs in India. What do you say in terms of what is an IPO?
Basically, a company decides to go public. How? By selling existing shares or issuing new shares with a final goal to raise, collecting new fresh capital resources. Having said that, now it's the moment to go public, especially in India, in my opinion, because Mumbai Stock Exchange is a booming market.
How to know if we should subscribe to that IPO and if that IPO is actually worth it?
If I have to mention three factors that we have to take into consideration, I have to look at the business model, how strong it is, if the company should remain local or there is a possibility to become global. The third, I think the most important thing is always to invest with a long-term perspective.
So hello everyone and welcome to today's episode of SDA Bocconi's Leadership and Finance Talks. I'm Atharva Kale, an International Master in Business candidate at SDA Bocconi, and today we have with us Professor Leonardo Etro. So I welcome you to the podcast, Professor. And Professor Etro is a Dean of SDA Bocconi Asia Center, and he's a Professor of Corporate Finance at SDA Bocconi. So, Professor, recently there has been a lot of hype about IPOs in India and retail investors investing in these IPOs to just gain off the listing gains. So, what do you say in terms of what is an IPO and why do companies feel the need to go public?
Hi, first of all, thank you very much for this invitation to be here at the SDA Bocconi Asia Center. Going back to your question, IPO, initial public offering, is an M&A transaction where basically a company decides to go public. How? By selling existing shares or issuing new shares with a final goal to raise, collecting new fresh capital resources in order to boost the company growth, in order to make new investments that could be the internationalization or the diversification of the business, or maybe to find any other kind of growth opportunities that can create value for the company.
So, the trend that majorly I have been observing in India is mostly the IPOs we have seen in the last year are mainly tech companies. So, there was a fintech company called Grow which IPO'd, which is IPOing right now, like it is in the process of issuing its IPO. Then there was Lenskart which IPO'd last week, which is like a spectacle company. It sells glasses and it has outlets all over India. And majorly overall, tech companies are IPOing right now. So there's a trend that we observe that India is looking at tech IPOs as the major thing right now. So what would you like to say about it?
Yeah, you mentioned two different IPOs about two completely different companies, I would say, because Lenskart is a retail, IO retail company, so let me say old style business, and the other one is a fintech company, digital broker company that is Grow. Having said that, now it's the moment to go public, especially in India, in my opinion, because Mumbai Stock Exchange is a booming market. The stock index price grew a lot in the last 3-4 years. Is one of the most performing stock exchange around the world, probably with the Japanese one and the Australian one. And so it is probably the right moment to make the exit. Startup entrepreneurs, or maybe also private equity fund, venture capital funds, considering the market cap, the valuation registered at the Mumbai Stock Exchange, they say as a very good moment in order to make an exit. And that's why this is probably the preferred one in terms of exit. Then we have other possibilities in order to realize an exit. One could be the trade sale, so I sell my company to a competitor, a bigger competitor. And the second one, I make a second round of financing with a private equity fund or venture capital fund. But now in this moment, I completely agree with you that making the exit with an IPO is the best goal and the best situation looking at the market condition.
So is it just best for the private equity funds or the venture capitals who are exiting that company at the moment, or it is also good for retailers who are subscribing that IPO and trying to get into the public space?
it really depends. Is a trade-off, of course, because the investors they will prefer making good investment with a standard price, not a boom price. Startup entrepreneurs, private equity investors, they will always prefer to make a great exit because they are measured on the IRR they generate for their investors. So, of course, there's always a trade-off between one and the others. And that's why it's quite difficult to keep the right moment in order to be listed, because you need to find the right price that will be appreciated by both parties, investors and entrepreneurs or private equity funds.
So there was this report I read last month, which basically said that if we take an average of listing gains that India observed in all of its IPOs in 2024, 2023, and 2025. So 2024, it was somewhere around 29%. In 2023, listing gains for retail investors were somewhere around 27%. But this year, that number has dropped to 10%. But we as young investors, we look at influencers who give their advice online, financial influencers online on YouTube, and they say subscribe to this IPO. But we don't know how to value an IPO, like how to know if we should subscribe to that IPO and if that IPO is actually worth it. So what would you say we should check in a company before investing in its offering?
This is a really intelligent question, of course. It's very difficult to give you a short answer because we can maybe talk for 2 hours. But if I have to mention three factors that we have to take into consideration when we invest in a stock that is going public, I would say, first of all, I have to look at the business model, how strong it is. Second, the fact that the company can become global, and so I need to understand if the company should remain local or there is a possibility to become global. There are some industries where it is very difficult to understand that. I prefer to mention food deliveries companies. In my opinion, is a business that is local by definition. It is very difficult to become global because depending on the country you are, on the language you have different operators and actors. If you want to become global, you have to do a lot of M&A, and the M&A could be really expensive. The third, I would say, is the scalability of the company. How you manage to scale up, how much time you need in order to scale up. And of course, short period will be better because otherwise the competition in the market can increase a lot. And you need to scale up as soon as you can in order to become leader of the market.
Before applying to any IPO, irrespective of whatever the company does or whatever the company is this like three things that we should check? Like,
yes, these
we
are
can't
the
exclude
three
these
most
things.
important things that I always check. Then, of course, I can check also the fundamentals of a company. For fundamentals, I mean, I have to do an important and appropriate financial analysis of the company. So it is important if the company is profitable. Before we were talking about growth. Is a digital broker company in the fintech business and is still profitable, is already profitable. So this is a good sign for a company that is considered a fintech, because I've seen many fintech companies that are still generating big losses, even if they were founded 5-6 years ago. So the profitability of the company is an important thing. I maybe can accept not being profitable now, but I should look at the business plan of the company, and in 2-3 years I must become profitable. Otherwise, I'm acquiring now a potential profit in the future, but it's just an option. And acquiring an option is different than acquiring a stock and company, something concrete.
This actually reminds me of a company called Zomato, which IPO'd in 2021. And while IPOing, the listing gains that investors saw were around 50%. But the company wasn't profitable when it went public. And just after the IPO, the company's shares started crashing, and it crashed around 65%.
Yeah, we have many other examples about For instance, Farfetch, the e-commerce luxury company, was listed in 2018 with, if I well remember, 1 billion revenues, 350 million pounds loss, and 6 times revenues in terms of valuation. So, 6 billion. And the company was destroying cash flows, destroying profit. But the company was valuated a lot. And then the market cap increased from 6 billion to even more than 20 billion. 2 years after, the market cap went down to 0.2 billion, and the company was saved by an important South Korean e-commerce. So when I invest in an IPO, I must be sure that there is a concrete, solid and strong business model behind that maybe now is not generating profit, but in the short term it will do.
So, like you mentioned, Farfetch, or in India, we talked about Grow or maybe Zomato. These are like huge brand names, and these are things like students use on an everyday basis. So, we basically think that if we know the company, we have heard about it, we have used it, it's a good investment. So, I know that approach is wrong. What I take back from this is maybe hype isn't necessarily equal to the value that company is generating.
This is something that we always think, but we don't have to invest in something popular just because it is popular. We need to invest in a stock that is maybe popular with a strong brand awareness, but with solid business model. And I think the most important thing is always to invest with a long-term perspective. If we invest with a short-term perspective, it's quite risky. If we invest in a stock and we say, okay, I will keep my investment for at least 2 years, I can capture the long-term growth and all the growth potential that the company generate and is going to generate with the cash collected during the IPO.
Okay, makes sense. So a while back you mentioned that you look if a company is local or global and what is its scalability like. So the question I have is you have worked across obviously a lot of global markets like markets for different countries and you have also taught across various markets. So how does this global perspective essentially help you in making investment decisions? Or the fact that I am in an international program, so how does that global perspective help me as an investor?
Because thinking global, studying global, participating to a global, let me say, master with a global perspective will give you the opportunity to learn different strategies, different markets, different perspectives used by investors. It's something quite easy to be understood that investors in the United States think in a very different way than investors in Europe or in India. Now, I'm Italian, so European, I better know what is happening to my country, to Italy, and to European continent. But it's something really well known that in Europe, we give much more meaning to the profit of a company, to the profitability of a company. In the United States, they give much more meaning to the growth opportunity, and let me say, the percentage of growth revenues of a company. So in the United States, investors, they prefer a company that is losing money, but with 30%, 40% revenues growth. In Europe, this is just an example, of course, we prefer a company with 5% profit and 10% revenues growth because we are more prudent and conservative by definition. And which is your opinion considering to the Indian market, if I can ask you?
So it largely depends on the investor psychology and how the markets function in that specific country, if I'm right.
Yeah, and
Okay.
I can agree. So this is something that we always have to remember. Analyzing different perspectives, different markets, different strategies, different competitions. This will help us in better understanding our position in investing or not in an IPO.
So just one last question. So it's not related to the topic. I'm looking to get into finance right now, and I've been trying to learn financial modeling, valuations, everything. But companies are generating their proprietary AIs, which are able to build models in their specifications and able to build valuation models in their specifications. And that kind of scares me at the moment. So what skills should I learn next to make myself more out there, right?
So what do you have to learn in
Yeah,
order
like
to be
to make
prepared?
use of that AI opportunity essentially. Because I learned financial modeling last year, and this year there was this firm that built an AI which models the whole company itself, and you don't have to do anything. You just have to give it
You have to know
drivers
how
and
to
everything.
use artificial intelligence in order to lose less time
Okay.
and to spend your time in high value services where the contribution of your human thought is the most important thing. So I think that artificial intelligence will help us in our job in focusing in the services that where we can really create value.
So for our viewers, IPO is a very interesting concept because we as learners, we look at influencers and we think, we see these YouTube watermarks which say 20% gains in a day and all, and we are attracted towards it because all of us are in the end looking for money. So, but I learned something from today that creation of value is more important, and looking at the business, its scalability, like you said, if it's local or global, looking at all these factors, and at the end of the day, financials of the company is what matters. So, this is what I take away from the conversation we have had today. And thank you, Professor, for sharing such insightful and actionable insights today. And I think I've had a wonderful
Thank you
time.
very much. It was my pleasure to collaborate with you, and I think we had a very good conversation that can create value for all of us.
Thank you.
Thank you.